This is the Value Investor Podcast with Tracy Reineck. All things value, all the time.
Welcome to this week's episode. And I wanted to get one thing out of the way first is that Dave Bartosiak has approved the new music. So he wasn't making any faces. He didn't cry out like he did after episode number 1. So he likes it. So we're keeping it. So this is our new music. So I think it's much better. And moving on to today's topic, it's going to be an interesting one because I know that a lot of value investors have been watching the earnings reports and we've been getting a lot of the big growth stocks and they get all the glamour, they get all the media, and it would be, Facebook, and then we had Amazon and Google and we had all these big names and everybody's going all crazy. Thousands of people are following them on like StockTwits and you feel left out. Because I know I do sometimes. I actually own Facebook and Amazon. That'll be a whole nother podcast. We'll talk about that another day about how value investors can actually own growth and not be freaked out about owning growth. But like I said, that'll be another topic. But for value investors who don't want to go to the dark side, they look at Facebook, it's trading at 39 times, and they say, there's no way I'm buying that. But the shares are up big. Over the last 5 years, they're up 286%. And I think since their IPO, it's up over 400%. So you see these little charts on StockTwits and you get all depressed, like, as a value investor, I'm never going to be able to get that. And I'm depressed. But I'm here to tell you that you shouldn't be, because there are value-like stocks, I'll call them, that don't get all the glamour. No one writes about them. No one's following them on StockTwits or cares when they have their earnings reports. And yet a lot of their returns have been better than Facebook's over the last 5 years, or close to as good as Facebook's, which is pretty darn good. Like I said, they are at 286% over the last 5 years. So I wanted to talk about a couple of them today to give the value investors or just people who want cheaper stocks in their portfolio and, don't want to go to the high growth names. But these stocks also do have the growth. That's the interesting thing. They're just not on the radar of everybody. So let's start in. My favorite one, I think, out of these 4 has to be Fortune Brands Home and Security. Their ticker is FBHS. You might have remembered them from the old Fortune Brands. They were spun off a couple of years ago from the parent, and they are just the home and security brands, which is like master brand cabinets. They make Moen faucets. They do Therma-Tru entry door systems. They have the Master Lock. Everybody uses Master Lock. They're headquartered in Deerfield, Illinois, so they don't get a lot of publicity. But over the last 5 years, if you had owned them over that entire time, you would have had a 415% return. But nobody's heard of them. Like, that's incredible. It blows away Facebook. But let's look at some of their stats. They're not super cheap. I'm not here to tell you that these are all cheap stocks. I do consider them more of a value based on the fact that they're much cheaper than these other growth companies, but they're not super cheap. But they have a forward P now of 23 because the stock has been on such a run. They're expected to grow earnings 32% this year, which is tremendous. They have a price to sales ratio of 2, which isn't too bad. And their price to book is 4.5, also not too bad. And you get a little bit of dividend with them. So I still consider the buying opportunity with Fortune Brands. They just had a really good quarter again. And these areas that they're in are really hot because home construction is increasing and people are remodeling. So their cabinets and faucets and all of that are doing well. So Fortune Brands, Home and Security, no one loves it. But if you're in it, you're really crushing it. So I still like Fortune Brands. Another stock, kind of in the same vein, actually, is one that doesn't get a lot of love either, and that's Masco. Their ticker is MAS. They've been around for about 80 years. I think they're in Detroit. I didn't write down this one where they were headquartered, but for some reason I remember they were in Michigan. If that's wrong, someone tweet at me, but I do believe they're Midwest. Over the last 5 years, their return, 383%. They're also about the same PE ratio as Fortune Brands. They're trading at 23 times. They're also going to grow quickly this year. Earnings growth is at 30%. They are similar to Fortune Brands is that they supply building products and, cabinets, faucets, countertops, all of that. They do Delta Faucet. They have the craft made cabinets. So I'm sure a lot of people have used their products or you have it in your home already. These stocks both, well, Fortune Brands wasn't spun off yet, but Masco really got hammered bad in the recession for obvious reasons because of what happened with the housing market. But now, like I said, things have turned around. Their price to sales ratio is 1.7. So I like that. It's not super cheap, under one, but that's under the average of the S&P 500. So while they have a slightly higher PE, their price to sales ratio is pretty attractive there. Moving on to another Midwest company that I really like. This one is based in Kenosha, Wisconsin, and it's called Snap-on. Their ticker is SNA. They're the cheapest of all the stocks today, and they're trading at 17 times. They make hand tools, power tools, and kind of like diagnostic tools and systems for basically auto repair shops. So you think about all the auto repair shops, not just in the United States, but worldwide, like Latin America, in Mexico and Brazil. And, you got to get your car repaired, and they make all the stuff for that. Their 5-year return is 207%. So it's slightly under Facebook, but that's only because I feel like the shares have stalled in the last 6 to 7 months. So, this could be a buying opportunity for Snap-on. Earnings are still double-digit growth this year, 11.8%. They have a price to sales of 2.7. That's not too low. That's about in line with the overall market. And then their price to book is 3.4. That's a little bit higher than what I would look for a value stock, but not incredibly so. So I like Snap-on here at this level, trading at the 17 times. And then turning to another interesting area, the final stock today is Newell Brands. That ticker is NWL. I actually own this in my portfolio, but I only own it because I own Jarden, and they acquired Jarden to start out the year. This company now controls like basically every brand you've ever used, and you don't even know it. You don't even know that it was Jarden or Newell Brands now that makes these things. So Sunbeam, the crock pot, I think everybody has a crock pot in their house for some reason. I don't know why. We all own one. Mr. Coffee. They have Rubbermaid. They do Goody, which is like the hair stuff. So if you're buying hair ties for women and girls, it's Goody. They have the OXO brand. That's like if I'm cooking and I'm measuring out all my flour and sugar and stuff, that's what those are. Those like tools, kitchen tools. They also make real tools, Lennox and Irwin tools. They have the Graco baby products. I think we've all used something from Graco at some point. They also own Yankee Candle, which is big for them. And that was a Jarden acquisition only a couple of years ago. And also my favorite, First Alert. Who doesn't have, the fire stuff in their house? We all do. And First Alert is just a huge brand. Everybody knows it. This company is based in Atlanta. Their 5-year return is 286%, which is the exact same as Facebook. You wouldn't know this, that all these products are about the same as Facebook. Their price to sales is 2.9, and which isn't too bad. That's about in line with the market. Their P is 18.7, which, I consider that to be pretty attractive here, given the extended valuations on the rest of the market. And they had a real good quarter too. They had organic growth in both their Newell brands and now their newly acquired Jarden brands of 5%. That's really strong. I mean, imagine how many more people need to buy a crock pot. I don't know, but someone is. Someone's out there buying it. And their earnings are expected to grow 31% this year. Some of that is also from the Jarden acquisition. But, this is just a company with a lot of really well-known brands that people keep buying worldwide. So I really like Newell, and WL, like I said, is the ticker there. So just pointing out that you don't have to be in Facebook, Amazon, these tech titans, as I call them. You don't have to be in the glamour stocks to actually see, really good returns on your money. You just have to buy good quality companies that are growing their earnings, that are making or doing something that everybody wants. And all four of these companies are doing that, and they're doing it quietly without anyone else even really noticing. So, like I said, Facebook's trading at 39 times. I would consider these four stocks to be quite a deal compared to Facebook right now, all with double-digit earnings growth. And so, value investors really have to be out there searching around. Now, like I said, there could be, other stocks that are even more of a value than these. I would consider these to be at the upper end of the value range. And I consider them to be kind of a value only because everything else is so expensive. But if you had bought a couple of these a couple of years ago, you really would have been in the value range because they were much cheaper a couple of years ago. But I don't feel like the runs on these are over. Business is good with all four of these companies right now. So it's something to keep in mind while you're looking for stocks out there. Don't rule out anything, basically. And for some reason, 3 out of the 4 of these are in the Midwest. I don't know. I must have had a bias or something, but these are just companies quietly going about their business. So if you want to know more value stocks, actually Newell Brands is owned in the value investor portfolio that I run. You might want to check out that. You can do a trial, like a 30-day trial of the value investor for just like $1, I think it is. And you can go check out everything that's in that portfolio. But be sure to check out all of our articles on Zacks.com because we write about value a lot. And a lot of these companies are covered there. And, we try to find these more hidden gems types of companies that no one else is talking about. So until next week, I'll give you some more stock picks then. So join me next week.